What's up, world? This is Sophisticated Investing Life, and today we're going to discuss why hedge fund managers don't trade options or don't really get into option selling, and why you should. Right? So, for those who do not know, my day job, I work for an institutional investor, one of the bigger ones in the United States, and essentially my job is to hire and fire hedge fund managers, right? And a lot of hedge fund managers, the majority of managers out there are stock pickers. They go long or they go short, right? And I used to wonder, once I came across my options trading strategy or learned more about options, like, why won't these hedge fund managers just do that? Why won't they just do what I'm doing, which I'm shooting for 30 to 50% annual returns year over year, which I think is very possible to do, right? Why won't they just go after that route instead of picking stocks? Like, what's the benefit of that, right? Like, there's a better way. So after discussing this topic with the main hedge fund manager that inspired me to get more into options, we discussed some reasons why, which makes perfect sense, right? Makes complete, total sense why they don't go that route, right? And it actually leaves the door open for us normal individual investors. Like, hedge funds, they do whatever they want. They're focused on something different than what we're focused on, and the goals are different. So it opens the door for us, right? To actually learn more about that manager who inspired me and kind of got me started on my options trading journey, and why I decided to make this transition from stocks to options, make sure to check out that video in the card above. Now, let's go ahead, tap that like button if you like the channel and like what you're watching, and let's go ahead and get started and to understand why hedge funds don't get into options trading and why you should. So, the first reason hedge fund managers don't really get into options trading and they prefer to stick to stocks is that it's just easier to connect theory to practice. Let me explain. It's just easier to wrap your head around stocks. It's easier to explain stocks, like why did you buy a stock or why did you do a certain thing, to a normal layman person, right? Because in the end of the day, when you're buying a stock for a long term, you're essentially investing in a business that you believe in. That's all the fundamental analysis, everything that you're doing, you're essentially investing in a business that you believe in. So very clear cut to understand. Also, when you go into business school, if you go to business school, you learn how to pick stocks from your finance courses there in college. Learn about value investing and everything like that. The connection from learning the theory to learning the practice is it's not that different. There's some differences there. There's some things that academia doesn't touch on when managing money, when trying to pick stocks, but for the most part, the connection's there, and you find your style along the way. That's not the case with options trading. That's not the case with options trading. That's not the case, preferably, with options selling, right? There's a barrier of entry in terms of learning. To be honest, what the hell's going on? What am I looking at? What am I looking for, right? There's a barrier of entry there. That's what pushed me away from options in the first place. I first learned about them in late 2016, early 2017, and I tried to get into it, and I just couldn't wrap my head around it, And then from theory to practice, you have when you learn in school, you learn about the Black-Scholes model, right, for pricing options, which is imperfect, totally theoretical, and doesn't even apply to the American options market, right? But it's still seen as something people use. In reality, people don't really use it that much, right? People don't really use it that much. If anything, real options traders, they look at one or two key principles or key concepts, and they focus in on that, and that's how they trade their options, right? Now, if you want to learn more about some key principles behind options trading, preferably selling options, check out my video about the basics of option trading in the card above, and why I prefer to sell options versus buy options. Now, this leads me to my second reason, which is that there are just more successful stock pickers out there, right? There's more examples of stock pickers. We can start first and foremost with Warren Buffett. He's number one, right? He mainly built his wealth through picking stocks. That's at least what the media tells you. I'm gonna tell you more about that. But there's other managers out there, right? The best quantitative hedge fund manager of all time, Jim Simons, right, of Renaissance Technology, stock picking in a quantitative way, but stock picking. Seth Klarman, stock picking. Bill Ackman, stock picking. Carl Icahn, stock picking. Benjamin Graham, stock picking. You got all of these examples, right? You have so many more examples of stock pickers who were successful and built businesses and became billionaires. You just don't have that many examples of option traders, right? Unless you go on Tasty Trade and look at shining stars, and they're not managing billions of dollars, they're managing thousands, right? And for the big options traders out there that you see Karen the super trader, possibly committing fraud and all that, that's not good. You got optionsellers.com blew up their fund. That's the one fund that you could really look at. And let's not forget, options are derivative contracts, and derivative contracts are kind of what kept the global financial crisis going back in 2007, 2008. There's so many negative views on just options trading. That's why hedge funds just avoid it. But it just leaves the door open for us individual investors who don't take too much risk while doing it, and open the door for us to take full advantage. Now, the last reason, and to be honest, this is the biggest reason, hands down, the biggest reason why managers don't get into it. The biggest reason is just the capacity of these funds, right? So if you are an aspiring hedge fund manager, you have big goals, right? You have big dreams. You want to manage billions, multi-billion-dollar funds, right? You want to manage multi-billion-dollar funds and be like those legendary investors and be like the Warren Buffetts of the world. And Warren Buffett, if he does trade options, he only trades them opportunistically, which, by the way, that brings up a point. He does trade options. And if you want to be like Warren Buffett, if you want to learn some of his secrets that the media doesn't talk about to really transform your investment acumen and take your investment game to the next level, you should probably download my free PDF discussing his 3 investment secrets that made him the wealthiest investor of all time. One of them is trading options opportunistically. And there's 2 more, and I talk about more about how you can take those investment secrets and take your investment game to the next level. Now, like I was saying before, if you're a hedge fund manager, you want to manage multi-billion dollars, right? You want to manage billions, 5, 6, 10, 20, $30 billion, right? You want to manage a lot of money, right? Like, for example, Ray Dalio, the most well-known hedge fund manager, right? He has the biggest fund. He manages like $180 billion. Insane number, right? An insane number that he's managing, right? You can't do that in the options market. If you have primarily an options trading fund, primarily options selling, you start struggling finding opportunities once you get to a $100 million fund, right? That's when you start having struggles, right? You get into 70, 80, 90, 100 million. You're starting to struggle a little bit finding trades. Where I know a number of hedge fund managers who are managing 10, 15, 20 billion dollars, and they don't struggle finding any opportunities at all. Because the stock market is such a larger market than the options market, right? So that's the key point. But for you and me, I'm perfectly fine starting to run the struggles once I get to $100 million. It's a long time from now. Hey, it's a long time from now. But if I'm not going to start struggling till then, I got a long way to go. I'm still in the thousands. I'm barely in the thousands, right? I'm barely there. So for us normal people, that is not an issue at all. And that is something that we just need to keep in mind. And that just opens the door. Again, all of this is talking about opening the door for us individual investors to walk in and trade options. And there you have it. The top 3 reasons why hedge fund managers don't really trade options and why you should instead. Now, most managers who do anything related to options is for protection. They buy puts, right? If they're buying puts, there's a lot of opening there if you're selling them, if you're the seller. And it just opens the door. So you can take full advantage of this. You can take full advantage of selling put options, which I'll discuss more. I'll discuss more on how to do that in the next episode of Investing in Real Life. It's a weekly show I have, comes out every Sunday evening. You should check it out. Really good stuff going through my journey trading options, as well as try to connect random life lessons to investing. Well, that's all I have for you all today. So until the next time, thank you for watching and stay sophisticated.